about a year, we're going to see $4,500 gold. You would say, this was a pleasant interview. Well, maybe we'll do it again, but I'll call you. Don't call me. It was like when I would hear those gentlemen saying $10,000 gold, and I go, yeah, right. I $10,000 gold, not if, but when. I look at, we're just under 4,000, but I believe that will become support by the end of this year. My target is probably between 4,250 and 4,350 as an end of year target. I think we could see it go near those highs. My son Joseph, who works with me, is a really strong opponent. He's been calling for $60 silver, and I'm telling wishful thinking. Now it seems like it's wishful thinking, but that wish might come true. Maybe not this year, but next year. I'm not convinced it's going to 100 next year.
Gold could revisit the 4,400 to 4,500 zone, though he used to roll his eyes at bold calls like $10,000 gold. Now, with prices just under 4,000, he thinks that level will turn into solid support by year's end. Gary Wanger's year-end target sits around 4,250 to 4,350, with a real shot at retesting the highs. His son Joseph has been firmly calling for $60 silver. It once sounded like wishful thinking, but the speaker admits it's becoming more realistic. Maybe not this year, but possibly next. He's not convinced silver hits $100 next year, but the door is definitely cracking open. Gary Wagner, a longtime precious metals analyst, highlights that central banks are buying gold faster than ever, signaling a global loss of faith in fiat currencies. With every nation overprinting money, the long-term value of paper currency is stuck in a slow race to zero. Assets with intrinsic value such as gold naturally trend higher over time. Gold sitting near 4,000 today is likely to turn into firm support by year-end, with 4,250 to 4,350 as the speaker's target. Within a year, Gary expects 4,000 to become the new permanent floor in a long-running global shift back toward hard assets. The markets are always shifting. Don't fall behind. To keep ahead of the curve, subscribe and like this video. Please leave your comments in the space provided below. We would be very grateful to hear from you.
Well, I believe, and this is according to the World Gold Council, it's central banks. And that's an interesting thing because 10, 20 years ago, they were flush with dollars. Dollars was the reserve currency, and that's how they had stability, right? What does it tell you when central banks worldwide are accumulating gold at a pace never before seen? China's been very aggressive. They're buying, and yet they're one of the largest gold producers in the world. What does that tell you? Well, I know they have some idea that they'll put their yuan on a gold standard. I don't think that will ever occur, but that's kind of the talk as to why they're accumulating. All countries are. Poland has been extremely aggressive in buying gold. There is not any sovereign nation now that has a central bank that doesn't focus on accumulating gold. So whether you're in the European Union and working with the euro, if you're any of the countries on the outside and have your own currency, whether you're in the United States, the fact of the matter is that as long as the currency that you work with is fiat, how can it gain value? How can the buying power go up? What can it do but have less buying power? And it's almost a maddening race to zero because there's a couple of countries that have tried to do things, Switzerland in particular, where they're trying a more conservative approach and they don't want to print 10x the amount of money that they actually have in reserves. But for the most part, all countries are guilty of overproducing their currency to artificially subjugate their subjects or to appease their subjects, I should say. And in the long run, what can come out of it? Nothing that good. How long will it take? I have no idea. What would be the end result? It isn't a pretty picture, and I hope it's not as bad as I foresee. It could be 20, 30, 40 years down the road. But the whole idea of taking a currency off of I'll call it a gold standard for lack of a better word, but when you think how recent that is in terms of world civilizations, I mean, you go back 100, 200, 300 years, you printed, if you had anything you printed or coins, they were intrinsic, silver coins, gold coins. What you produced as a local currency was what you had available in the treasury. If you didn't have it, you couldn't spend it. That changed after World War II. And so we are in a situation where we are trying a true economic experiment without the knowledge of what the long-term outcome is going to be.
All
Will
good
we pull it
points.
off?
Yeah.
I hope we do pull it off. But the thing is that we forget that very recently, under 100 years ago, we dramatically shifted the way nations use currencies. And what will become of it? I don't have the answer, but it's worth pondering. Gold is one of them. These are the land, gold, there's other ones, but these are things that civilizations throughout history have put intrinsic value on that asset. If you own a piece of land, there's value to it. For whatever reason, because of the rarity of gold, we've assigned that value to gold. That
Yeah.
might change in terms of a relative strength or weakness. That's noise in the market, supply and demand, but ultimately it has to go higher. Now, where do I see it? Right now, I mean, we're looking at about 39.90, just under 4,000. I think that by the end of the year, we will easily be above 4,000. 4,000 would become a base of support, hard support next year, and not resistance. Right now, what was a high that we hit? Almost 4,400. If we would be doing this interview, let's say a year and a half ago, and I told you, about a year, we're going to see $4,500 gold. You would say, this was a pleasant interview. Well, maybe we'll do it again, but I'll call you. Don't call me. It was like when I would hear those gentlemen saying $10,000 gold, and I go, yeah, right. I $10,000 gold, not if, but when, but way when. That's way down the road. But anything that is paired against a currency that has no real intrinsic value, against an asset that civilizations, countries across the board assign a value to, there's only one direction it can go. The question is, when will it get to certain levels? Right now, as I said, I look at, we're just under 4,000, but I believe that will become support by the end of this year. My target is probably between 4,250 and 4,350 as an end of year target. I think we could see it go near those highs. I think that next year, these things will go through cycles. But I think that what's important is where the median price will be. And I think that $4,000 per ounce will, within a year or so, become what we consider to be the standard hard floor support level. And that's amazing. I wish I bought more years ago.
Gary Wagner admits he doubted silver early in the year, but now even his son's $60 target doesn't look far-fetched, possibly hitting next year. Silver is still the everyday person's metal, affordable and long overdue to catch up with gold. Gary urges families to save even a small percentage monthly in gold or silver for long-term security and liquidity. Hard assets outlast currency risk, and whatever he buys isn't for him anyway but for future generations. Let's get into the details of the interview for further insight.
You know what? I was a naysayer with silver for much of the beginning of this year up till about the middle. My son Joseph, who works with me, is a really strong opponent. He's been calling for $60 silver, and I'm telling wishful thinking. Now it seems like it's wishful thinking, but that wish might come true. Maybe not this year, but next year. I'm not convinced it's going to 100 next year. Inevitably, it will make new all-time record highs, which it already has once. It's finally catching up with gold. The ratio is so different. If you can own something for $50 and something for 4,000, there's a tremendous difference between the two metals. But silver's always been what I like to think of as the average man's precious metal. It might be too much money to go out and buy. You know, you don't want to buy a coin for 4,000. That might not be something that's available to you, but you can always scrape together $50 to get an ounce of silver. And if you start doing that, because I am a hardcore advocate, and I believe, have had this belief all my life. My grandfather was a gold trader in Hungary, and I believe that all individuals, all families need to put, if they can't put 10 to 15%, put 7%, put 6%, put part of your money, stash it in gold and silver. You can do either because they both have value to it, but put them in hard assets, not just paper stocks or paper money. Or land is a good thing, but there's no liquidity. If times get tough and you need to feed the family, you're not going to sell off a parcel of your land, but you'll always be able to take that gold coin, silver coin down to your butcher and do a trade. There's
Yeah.
always that. And I'm not saying that that's going to come to pass, God forbid. But what I am saying is that it's important that all families have some kind of liquidity that's not at the beck and call of how the government feels about printing that month or that year.
Yeah. Yeah.
Always, I really believe this, and I can't stress it enough to our viewers here. Put something away every month, 5%, 2%, but something every month. Over time, that grows. And I promise you, for those that do that, 5 years from now, 10 years from now, you'll feel it was one of the smarter things you did with your investment dollars.
Even if it goes down, leave it for your kids and grandkids. Yes.
Well, you know what? Listen, every ounce of gold I bought, every ounce of silver I bought, it's not for me.
Yes.
I get to
Exactly.
look at it more than they do,
Yes.
but I'm not going to sell it. And where's it going to go when I'm not here? Because as far as I know, I can't live forever yet. That's maybe 100 years off. But the thing is, it's for my kids anyways.
What are your thoughts? Why does Gary believe silver's long-term value is finally starting to catch up to gold, and how realistic is the push towards $60 or even $100 silver? How does his emphasis on saving a small percentage in physical gold and silver reflect broader concerns about currency risk and long-term family financial security? If you appreciate this video, please hit the bell button for timely updates, subscribe to the channel, and like the video. Also, leave a remark with your ideas. We value your presence and thank you for your support.